Let's take a look at how the Asian markets have opened this morning. It's a slightly mixed start compared to the gains we saw on Wall Street.
It's not about profit for profit's sake, but it's about driving profit by doing work that the society needs.
We've already created facilities to produce up to 200 traction motors for the railway applications per month.
And our own markets look like they're going to fly off the shelves this morning. 78 points higher now in the Nifty.
Fundamentally, nothing has become so negative that the price performance has been weak.
As a prudent regulator, you have to move counter-cyclically in terms of your policies.
As an investor, one will look at the end of the day, what is the PAT and cash flow to the company.
A steady morning so far, a good Tuesday. The Nifty is up 80 points.
The rescue operations in Uttarkashi have entered its 10th day today. Well, it's a good day, right, for the markets. The screen shows that all four indices, they are in the green right now.
That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me, Surbhi Upadhyay and Nigel D'Souza. Guys, so far holding up pretty okay.
Absolutely, not a bad day at all. And considering the kind of wobbly start we had yesterday, this is looking good. It's been a slightly quieter day for mid-caps. But I think the banks also, there's no broad collapse. There's participation from Reliance today, so I guess the bulls will be happy with this.
The only thing is IT index. The Nifty IT index started with strength and now it's given up all its gains and is completely flattened out. So even as the Nifty bank has been stable, there you have that IT index. It's been a bit of a, absolutely flat now.
But I think if you pull up the IT index and you pull up the Nifty, both month-to-date charts of both these two, you'll see the IT index, I think, is up close to around 6%.
6%.
So that's why it's giving back some part of what it's put on. That has been the big outperforming index. And we know that the Nifty bank, in fact, has been the underperformer. And the reason that it could underperform is because the IT index has been outperforming. So I think we just get that chart up for you on the screen. It'll tell you a better picture. That's the Nifty bank, correct? That's as flat as can be. But the IT index in the last 1 month or so, that's up close to around 6%, guys. But, two important cues that I'm looking out for. One is the mid-cap index. Today it's actually underperforming, and we haven't seen that in a while. So that index is more or less flattish, while the Nifty is up close to around 90 points. So that's point number one. Point number two is the Nifty Financial Services Index for the next 60 minutes is going to be in focus. And that one is closer to the lower end of the range. It's come off close to around 40, 45 points approximately from the high point. So let's see how it goes. It's been more or less stable, but now it's trending towards the lower end, positioning as such that we don't get past the 19,700 odd mark. So let's see what happens. But that's the index to watch for the final 60 minutes.
Absolutely. I just want to add that on mid-caps as well, while the index is not telling you the whole story, you go down to individual stock level action, and then there's plenty happening there. So it's not like it's a completely dull market. I'll just take some, names. For example, Oberoi, of course, it started with that move yesterday with Oberoi Realty moving to Delhi. Then they're doing some more launches. A 4% add-on move today on an Oberoi Realty. Kalyan Jewelers, which got quite a bit of a drubbing just post numbers, is again seeing a wave of buyers come in today. And then the entire railway pack is up and about. Not just Titagarh Wagons because of course, their joint venture on the metro side, but your Ircon, RVNL, a lot of these other railway names, they are also not looking bad at all. So even on the mid-caps, don't go by just what the index is telling you. Actually go more by what the advance decline ratio is telling. And that's giving the flavor of the market that the number of advancing stocks is far, far more than the number of declining stocks even right now. So
there's
that's
just one stock I want to talk about. That's Tata Motors. And I think Tata Motors has had this spike in the last few minutes. Pull up that intraday chart of Tata Motors. Now, tomorrow, Tata Tech IPO opens. We know it's an offer for sale. The total size is about 3,000 crores. Of that, 2,300 crores will be raised by Tata Motors, the promoter. So money will be infused in Tata Motors. We know that it's been happening for a long time. So it's not that this is fresh development. But just want to highlight that tomorrow when Tata Tech IPO opens, in the issue of overall 3,000 crore rupees, about 2,300 crore goes to the promoter, Tata Motors, and that stock, at least in the last 10 minutes, has been fairly excited.
Just some more names, absolutely. So that's an important one that you pointed out because it's a big name on the IPO street. On mid-caps, just pointing out some more names, so keep them on your radar. Honasa, the buying continues as a 3% surge on the Mama Earth parent company as we speak. And a recent listing, remember RR Kabel, suddenly it's back on the horizon. So clearly there are some buyers over there, 6% up. So small caps or mid caps, short point is that there's plenty of individual level stock selection, stock picking that is going on. So let's kick it off then and talk about what these individual trades could actually look like. We have Mitesh with us as always. Good afternoon, Mitesh. What's the advice? Index, stocks, what trades?
Yeah, good afternoon, Subi. I think the Nifty, once again failed to get past this 19,850 mark. We got a high of around 19,829 on the spot, and I think that's the way it will play out. I think the Nifty still maybe needs a couple of more days of consolidation before there's strength to break beyond this 19,850, 870 zone. And once that happens, we can then look at 20,000 levels again. So that's the way I think, we'll play it out. Wait for dips to buy into or see the Nifty get past 19,870 before taking a long position. And on the stock side, I have a buy on Astral with a stop at about 1900 for targets of 2000 on the upside. And the other one is Ashok Leyland, which I'll give a call with a disclaimer. I have some call option positions over here. It's reversing after a good correction and decline for the last 2-3 months, and now it's showing signs of maybe starting an uptrend. So buy here with a stop at about 173.5. Look for targets of 186 to begin with.
Okay, that's Ashok Leyland for you and the trade there. KPIT Tech is a stock on our radar and the stock is slumping in trade. It's now down more than 7%. Kotak Institutional Equities came out with a note on it. They've been bearish on KPIT Tech. Their target price is at 940, much lower than the current market price of 1,500. The key reason is, according to them, valuations are very expensive. The stock has seen a big run up, 36% in the last 1 month. More than 100% since the beginning of the year. This has made the valuations very expensive because it's now trading at 59 times forward multiple. The stock's growth rates have been good, but can you extrapolate those strong growth rates into the longer term future? Because the current valuations are saying that the company is going to grow its top line by 20% for the next 10 years. They agree that KPIT Tech deserves to trade at a premium because of its strong capability. They are disagreeing on the extent, the magnitude of premium which has been assigned by the street. So that's about KPIT technology. And just a quick word about the difference between KPIT Tech and Tata Tech, because both of them are engineering R&D players and largely cater to the automotive space. So in that sense, these are the two closest comparables. Now, KPIT Tech gets about nearly 100% of its revenues from the automotive sector, while for Tata Tech, about 70% comes from the automotive sector. The balance comes in from aerospace, heavy construction, machinery, vehicles. So that's one difference. In terms of the size of the company and the financial profile, there you have it. Tata Tech is slightly bigger at 4,400 crore. The constant currency revenue growth last year for KPIT Tech was higher. So KPIT Tech is slightly smaller, but it's been growing at a faster clip. The margins for both the companies are comparable. Only thing is valuations. Now, no other sector has seen as much disruption as the automotive sector. Everyone has had to reimagine the entire automotive architecture as they move from ICE to EV and the other architectures, which is why ER&D spends in the automotive sector have been very high, and the only play that the investors had was KPIT Tech. So the stock has been bid up. This is the trailing valuation as given in the RHP of Tata Tech. Tata Tech is now available at the upper end at 32 times, while KPIT Tech is available at 80 times. Dipan is now with us on the show. Dipan, would you bet on Tata Tech? And just another note, as our team was helpfully putting out, its dependence on Tata Motors and JLR, the two anchor clients, is close to about 40% of its overall revenues. But Dipan, recommend subscribing to Tata Tech? And is KPIT Tech a buy with the fall that we've seen today?
Yeah, good afternoon, Rima, and thank you for having me on your show. I heard your report on KPIT, and I do understand the broker just said the stock is expensive, therefore they're initiating a sell. That may be justified, but in my opinion and in my experience, just selling a stock because it is too expensive on a price to earnings multiple has never worked out very well, because numbers can always surprise you on the upside. And even if the price remains static and you have 3-4 quarters of strong earnings growth, then the P multiple can certainly compress. And then if the growth sustains beyond the next 3-4 quarters as well, then the stock can give very decent returns. So I don't think that just because the stock is expensive, it is a reason to sell. KPIT Tech has the best in class earnings growth over the last 2-3 quarters or so. And they're sitting on good order books and have got very good relationship with certain auto majors as well. So I would say that I don't agree with selling KPIT, a company, a disclosure, a company in which we and our clients are invested in. Coming to Tata Technologies, Rima, it's a no-brainer. I think you'll be lucky to get any allotment at all. And if you do get it, then just hold it with both hands, and maybe you could even add to that holding on listing itself. And what I like best about Tata Technologies is the time when the entire sector was under stress, which is the last 9 months, their performance has been exceptionally good. And this entire auto space, I think there's hardly any slackness in tech spending over there. So whether it's KPIT, Tata Elxsi, Tata Technologies, to an extent LTTS also, very positive on these stocks person.
Okay, so that's a positive view coming in on a lot of these ER&D plays as they're known. Deepan, hi, good afternoon. I do want to sort of get you, since we're on the subject of a lot of the new listings coming to the market, one of them is doing exceedingly well in the market again today. I was just looking at Honasa Consumer, and the stock is up about 4.5%. Serious buying on Honasa. We'll get the intraday chart up. And this week it's put on about 9 to 10%. The stock it's slipped just after the listing to about 300. It's already moved up to about 365 now. What is your view on this one?
Surabhi, I was hoping you wouldn't ask that question, because I have been watching CNBC since morning, and many times this name has come up. And frankly, I know nothing about this company. I just saw the valuation, getting a consumption-oriented stock, FMCG type of a stock at this kind of valuation. I just kind of shunned it.
Okay, so Deepan, really appreciate your frankness and honesty. I'm going to change the question in that case. Okay. It's very clear that the market is wanting to now piggyback on discretionary consumption, right? The top end of the consumer. That could explain why the revival of interest in, let's say, even a Zomato, along with the revival in earnings and better profitability. But if you were to, or real estate for that matter, look at what's happening to Oberoi. So if you were to play revival in top-end discretionary consumption, which stock would you go with?
Okay, but a lot of disclosure over here. Landmark Cars. Because you can't buy Mercedes India, you buy Landmark Cars. They're the largest dealers for Mercedes and Jeep, and they even have got some of the other smaller agencies. And the interesting part is that the demand for 1 crore plus cars is so huge that they're not able to cope up with the demand as well, and there is many months waiting period as well. So of course they're dependent on Mercedes, they're just their agents selling cars over here, they're not an OEM themselves. But I'm very confident of the earnings trajectory of that company for the next several years, I would say. I think we are seeing a fabulous wealth effect taking place over here, and owning a Mercedes or any luxury car is the first stop for anybody who has any amount of net worth in place. And, this is something they get a lot of revenues from servicing and spare parts as well. And that's like a nice steady revenue stream going ahead. And gradually they're increasing their outlets as well, getting into newer OEMs also. Recently they got MG cars as well, MG Motors as well, for a couple of locations. A pretty well managed company, and I would say good capital allocation policies as well. So when you talk about premiumization, this is one company which comes to mind.
Okay. Deepan, I can tell you this. Nigel's been telling me, pushing me to sell my 10-year-old car for the longest time. Here, I'm not even selling my 10-year-old car. And here, Deepan is saying that there is such a long waiting queue for cars which are 1 CR plus. I don't know. I'm just going to not talk after this now.
Time's good. Maybe you'll buy a new car by the end of this year?
Definitely not the sellers that Deepan is talking about. So, yeah, I'm still thinking. For me, a regular car is also, the price has gone up now 40% in the last decade.
Okay, all right. Let's move on then, Deepan. I wanted a view on this one. Reliance Industries, that's higher in trade after positive commentary coming in from Morgan Stanley. Sonal joins us to bring us more details on that particular note. Sonal?
Thank you so much for that. Well, Morgan Stanley has written an interesting note on Reliance Industries. They talk about their investment cycle. The note talks about the Reliance Industries exiting its 4th investment cycle in 2024. It's been the shortest cycle that the company has seen in 30 years. Now they say that monetization of these investments as upcycle across vertical picks up remains most underappreciated. So what they're trying to say is there are some catalysts in place which could lead to better monetization of this investment cycle as well. This would be significant ramp up in retail and revenue, especially the grocery side. There's inventory restocking for chemicals in India. That continues to be the focus point across the industry. Tightening in global fuel markets as China caps domestic refining capacity by 2025 till 2025. So that would mean higher refining margins going forward. There would be a gas or oil production step up that company saw in Q2 as well and is expected to continue as well. Monetization of 5G via fixed wireless offering and market share gains that the company company has already been seeing. So these are a couple of triggers for the investment cycle to turn and be in favor of Reliance Industries. So that is something that they have highlighted would be the growth trigger for the company.
Okay, all right, got that. Thanks a lot for that, Sonal. Deepan, what do you make of this one and of the note that the brokerage has written?
No, I think very sound logic, but the real trigger for Reliance Industries will come when the FIs come to start buying. And, we are still just about seeing a little bit positive numbers here and there. But when we have solid FI flows coming into the country for whatever reason, maybe there's a risk on trade, maybe the ETFs over there get more India allocation. Whatever the reason may be, when FI start to buy, then that's when you will see super outperformance in Reliance and some of the other large index stocks, including HDFC Bank and Kotak Bank, ICICI as well. So no doubt, I think fundamentally, certainly at attractive levels, it has underperformed, available at reasonable valuations, a lot of value being created in all the subsidiaries and investments which they are making in new energy as well as some of the other ventures. But one question which still remains unanswered is unlocking of value and listing of Reliance Retail and Jio as well. Right now, Reliance Industries is a conglomerate of many businesses, and that certainly isn't attractive to investors who want to play a very specific investment theme like, say, retail or telecom or new generation or new age technology. So from that point of view, I think a simpler ownership structure certainly is something which the street is looking forward to.
Deepan, do you think Oberoi is going to be successful? Oberoi Realty is going to be successful in the real estate market? And what could its aspirations be? Because the street likes to price in the future, something which is going to happen 5-10 years down the line. Right now, they've announced only their maiden project in the NCR region. But do you think it wants, should the street be, investors be betting on Oberoi Realty wanting to be a big player, going out there, purchasing land, announcing many projects in the NCR region? And how successful can it be? Would you bet on it?
See, actually, I have a slightly contrarian view over here, and I'm not that optimistic that they have chosen to go into the NCR region. My reading of the entire real estate industry is that these are regional plays, and a company which has got a strength in a particular region tends to prosper and thrive in that region because they know the regulatory environment, they have a brand over there, they know how to, manage the sales, get the customers, how to get the plans passed and then construct in record time and deliver. So this is a very regionally centric business. I mean, DLF is not successful in Mumbai for that matter. And Prestige has just about got into Mumbai, they're not made a name over here. So Oberoi going into NCR is not great news from my perspective. Within the western region, Mumbai, as well as Pune, wherever they are operating, they have a great scope to expand their operations. There are so many joint development opportunities as well. And even in their existing projects, they have a lot of land bank. So from that point of view, I'm not positive of them diversifying into NCR. But nonetheless, I think Oberoi is a quality player. And even when the cycle was down, they managed their affairs pretty well. And the most interesting part is that they are on the premium side as far as real estate is concerned, where prices have been steadily moving up. So it's like they're sitting on value of the land or the constructed property, which is just going up, every few quarters or so. So from that point of view, very positive on a fundamental basis, but not that enthused about the entry into the NCR market.
Got it. All right, Deepan, request you to stay with us. Just a quick stock check. Kolte Patil is one stock that's moved to the low point of the day. So I think Kolte Patil should come up for you on the screen. And the other one we're looking at is Mankind Pharma as well. Both those two stocks have slipped in the last few minutes. In the broader markets, there are some stocks that are moving a little bit lower. That's Kolte Patil. Staged a bit of a recovery in today, but that's fallen lower. And Mankind Pharma, suddenly that stock as well is down close to around 4%. Slip into a short break. You come back. We'll be joined by Rupin Rajguru of Julius Baer. He'll be talking markets and sectors and stocks that he likes. Welcome back. Well, we need to turn our attention to Titan. The reason is because that company has become the 18th most valuable company on the BSE. The market capitalization is now 3 lakh crore. It's seen a big rally. If I just plot the chart, in 2004, the stock was approximately 10 rupees. At the end of 2005, it was close to around 32 rupees. So in that sense, it's 100 times if you look at it from 2005 end. And if you look at prior to that, well, it's been a big gain. And 100 times, by the way, is 10,000%. Big winner. Deepan, what do you make of the stock? People have said in the past, I think over the last 13, 14 years that I'm tracking markets, that it's expensive. It trades at 60, 65 times. It still trades at 67 times and it still gives those sort of returns. And when you identify one of these big winners, you need to hold on to it. And in fact, ride on it. I mean, that's precisely what's happened. The late Mr. Rakesh Jhunjhunwala as well, he identified it early. It's been a big wealth creator and his family still owns close to around 5.3% stake in the company, valued at 16,200 crore rupees. Your take, Deepan.
No, I think if you've been a shareholder of Titan Industries, as we have been fortunately, as a measure of disclosure, I think it's been a great investment, a multi-bagger stock. And it kind of supports, the argument I made in the beginning of the show on KPIT that just because the stock is expensive, if you sell it off, then you're never going to get multi-bagger returns as you got in Titan because it was always expensive. And yet quarter after quarter, year after year, they delivered exceptional results. There have always been a few quarters in Titan where the numbers have been stagnant, slightly lower also. They've managed so many of these, domestic crises like demonetization and COVID as well. And each time I think they have come out stronger and stronger. And now that we are seeing a super festive season and uptick in premium consumption, Titan clearly is benefiting from that. And they're also benefiting from increased market share from the unorganized sector, which has been grappling with many of these issues. So I still remain very optimistic on Titan. Although, buying at these levels may be not so sure because there's not much margin of safety. Companies like Titan is when you buy when you're in a deep bear market and stock is corrected by 25, 30% or so. And once you buy them, then you need to have a 3 to 5 year type of a time frame. So from that point of view, in our opinion, it's Titan is a hold at this point of time.
Deepan, yesterday we saw, on Twitter how Titan has opened up a new store in America and people are queuing up. Since you track Titan very closely and you are a shareholder in Titan, can you tell us what are their plans of, growth plans outside of India?
Yeah, I think it's good that Titan is trying to, grow globally, but that's a different kind of opportunity and a business model, and I'm not sure whether it will really succeed. But within India itself, there is so much of opportunity. They are gradually going into tier 2, tier 3 towns. Within the metro, they're opening many more branches as well, going deeper into the suburbs over there. And they are constantly evolving themselves. Now, I'll tell you one more big opportunity for Titan, which is not yet emerged, is this lab-grown diamonds, which I don't think they are selling as yet. But it's a rage globally. And I would believe 30-40% of the jewelry sold abroad or in developed markets is lab-grown. So if Titan were to introduce a lab-grown range, then that would lower the cost of ownership of a lot of jewelry, and that would be a huge opportunity for Titan as well. So these things keep on happening, and although there is a runway for growth globally as well, but I'm not sure Titan is such a powerful brand in the global markets for them to sustain and grow in the way they've grown in the Indian markets. But within India itself, there is a lot of opportunity.
All right, Deepan, got that. So you're bullish on Titan. And while we're talking about Titan, I mean, that Kalyan Jewellers stock continues to rally away as well. I guess jewelers are really sparkling this season. Thanks for joining in. You have a great afternoon. And of course, we'll catch up with you again soon. Time now to move on to our next guest. Rupin Rajguru, Head of Equity Investment and Strategy at Julius Baer, is with us. Rupin, thanks so much for being with us. So what thoughts? Let's start with the top-down view first. Once again, approaching 20,000. And a very interesting mix of stocks that the market seems to be latching on to now in this leg. Is your overall view on the market first up?
Yeah, hi. Good afternoon, Surbi. So you're right. We are approaching again a new all-time high for our markets. And if you see, in the global context, the US market since its October 27th low is up almost 10% in matter of 25 odd days. So the momentum which we are clearly seeing in the global markets, while it has been much more volatile, in that context, we are still a relative underperformer. Like Nifty would be up 8 odd percent YTD. S&P 500 is up 16 plus percent. Nasdaq probably 35%. In all probability now, since some of the heavyweights, which were relative underperformers, are participating in the market, there is high probability, as they call, the Santa Claus rally towards the end of the year, we might be touching the all-time high levels for the market. So that's the overall mood. So while the sentiment and liquidity keeps on changing very fast, but as things stand today, there is high probability that we might reach that in the very near term.
Okay, all right. Hi, Rupen. Good afternoon and good to see you. Rupen, one problem pocket has been that the rich are getting richer. Premium sales are really, doing very, very well. But rural India is still in pain. I believe that you have identified a theme to play on rural India, which is the two-wheeler space. How would you play that? I mean, tell us more about that, because some of these stocks still have done very, very well. Hero MotoCorp, Bajaj Auto, they're near 52-week highs.
Hi, afternoon, Nigel. If you look into the two-wheeler industry, probably this year we will end with volumes of 17 odd million for the two-wheeler industry, which would be still significantly lower. I think pre-COVID high, if I'm not mistaken, is closer to 21, 22 million as far as volume is concerned. So while our overall GDP has grown, the overall two-wheeler sales are much lower than its peak sales. And here, as you rightly said, rural economy is something which has been struggling. While the commentaries of the consumer companies has still been a little bit tepid, but if you hear through the commentary of some of the two-wheeler companies, clearly I think because the pent-up demand is there, inflation is now coming off. We are clearly seeing some bit of trickling down of the spending of government, as a lot of state elections are already on elections, and we are going to see general election. And net, I think that has bottomed out. So tactically, we might see a spike in that segment, and hence probably over next 2 to 3 quarters, we might see a robust volume numbers from these companies. So yes, some of the stocks have while they are close to its all-time high, but on a 3 to 4 year basis, they have been still a big relative underperformer. So some bit of catching up is very much possible.
Are you recommend or are you trimming your holdings in any stocks or sector, Rupen?
So Rima, if you look through, it's a constant process, and here we constantly evaluate which stocks have run up ahead of their fundamentals, and a lot of the good news are already in the price. So that trimming exercise is very much on, and that is across the sector. But at an aggregate level, probably I mentioned in your channel some time back, we have reduced our weightage towards the capital goods industrials as a segment, because while we are very positive on the prospects of that sector, but the way that some of the stocks have run much ahead, and probably the good news of next 2-3 years are also there in pricing in some of the stocks. So that is where we are taking some money off the table and redeploying it back in some of the large cap names, because large caps as a segment, rather not even large cap, mega caps have significantly underperformed in India, and we are redeploying money in some of those mega caps across the sector.
Okay, so you're redeploying money in the mega caps. Some more clues here, Rupen. Now, does that mean large private sector banks? Is that where you are? And I mean, since I asked the question on banking, what about this big sort of, intervention from the Reserve Bank of India on the unsecured credit side? Does that kind of make you a little wary of growth rates in the near term?
Absolutely. In fact, I would say it's a very good move, and historically we have seen RBI has always been ahead of the curve. If you recollect way back in 2007, they increased, the risk weights towards the real estate sector. So some of these things, RBI probably has been much more proactive regulator. And if you see, they have been mentioning about the way some of these unsecured lending were carried out by some of the NBFCs or fintechs. So I think it's a very good move, which probably, it's a more good preventive move. So to answer your question, does that impact the overall growth of the banking sector? No. And on the questions of mega caps, yes, some of the large banks definitely are at a valuation probably even lower than what valuation it were trading during the global financial crisis. So while there are some company-specific issues in some of the banks which are getting sorted out, but in that context, this is the time to look into those stocks, because the margin of safety in those stocks is much higher at current levels. So our preference would be towards some of those mega cap banking names, and even some of the large conglomerate, which is present across the board, which is the largest market cap company. So all those are. And those have been a big relative underperformer over the last 2-year period.
Okay, all right. And Rupen, final question before we let you go. Real estate stocks actually have come back in a big way. We talk about registrations that have done very, very well. Now it appears some of these larger names, they want to get larger. They want a bigger slice of India, so they're going to other parts of the country as well. But you would rather play the ancillaries rather than play the real estate stocks? Tell us how you go about it. Will it be the ancillaries in terms of tiles, pipe makers? Will it be cement companies?
Nigel, no, you're absolutely right. Real estate typically has a longer 8 to 10 year cycle, and we had a big bear market probably starting 2010 till almost till 1920, and we are now seeing a decent upcycle. So are we in an early cycle? No, probably we're in mid cycle. So the real estate developers typically, as we get into mid-cycle and as we go into the peak cycle, a lot of investments, buying land banks and all happen. And some of them are good. Some of them, time will only tell whether the diversification was the right move. In fact, sometime a few minutes back, you were chatting with the previous guest about some diversification by one real estate player. So all those things will be there. So our take is, yes, real estate as a segment has done well. So typically the best way would be the way to play through the ancillaries, which are the home improvement companies, because after the pre-sales and sales is done, the big expenditure happens to those segments. So across the board there, some of the segments which you mentioned, be it tiles, be it plywood, be it cables and wires, and cement. Yes, almost 50% of the overall cement consumption is consumed by the real estate sector. So that itself also will do well. So yes, that's the segment which we clearly believe will be posting a very strong growth for next few years. And yes, we have to be very cognizant about the valuation into these companies. But I know these companies clearly will have a decent compounding of their earnings for next 3 to 5 years, and we are constructive towards those segments.
Okay, all right. Thank you very much. Great talking to you today, and we look forward to more conversations in the future as well. Appreciate your time. We'll take a break on that note. On the other side, as always, all the buzz from the dealing room. So we'll have Nimesh join in and some final calls then on the technical side with Mitesh as well. Welcome back. So the market's been managing to retain the bulk of the gains today. It's a good day for those who've perhaps started looking at some trades on the upside. Let's bring in Nimesh. Nimesh, people will always complain. They'll say that it's better when you get that gap down because then you can ride the uptrend through the day. But today it was like it started steady, pretty much holding steady. But what's the sense you picked up?
I think what's helping the market today is the institutional activity. It looks like there is buying interest back from the larger institution. In fact, there's going to be a small market at close basket buying as well in today's trade. So that's going to help the momentum on the upside. I guess the sector which is doing good today is real estate names. A lot of stocks within the real estate basket are buzzing in trade today and backed by some buying as well. The midcap index looks flat, but there are a lot of individual winners within the midcap, and also looks like it's largely stock-specific action in today's trade. I guess from a technical point of view, watch out for 19,800, 19,850 as the next resistance level. So that's just to watch out on the upside. But broadly, today's rally is backed by FI buying as well. And as I said, there is a small market at close basket buying at a leading FI desk.
Okay, all right. Thanks a lot for that, Nimesh. But let's get to the exciting part. Individual stocks, what are you picking up?
Well, actually, in terms of individual names, the first stock on my list is Texmac or Rail. That stock is buzzing in trade today. But I understand the company is very close to raising funds via QIP very soon. So watch out for that in the days to come. The second stock is PG Electroplast. Big mover in that mid-cap stock. The stock has hit a fresh 50-week high as well in today's trade. I understand the selling from a large private equity investor is largely over, and at the same time, a leading domestic mutual fund is an active buyer as well. So a lot of that PE selling got absorbed by the mutual fund in that stock. So that's buzzing in trade. The third stock is Chambal Fertilizer. Within the fertilizer names, this is one stock that stands out largely on buying interest from larger FIs. So expect high delivery volumes in today's trade. And the last one is Fortis Healthcare. Been consolidating in a narrow range, but I understand some HN investors quite active, and Citi is anticipating some sort of a corporate development very soon. So that's keeping the stock excited. That is Fortis Healthcare.
Okay, thank you very much for that. Mitesh is back with us to give us a few BTST calls. Mitesh, what do you have for us?
So BTST on Crompton, I think that's trading well today. Recommend buying here with the stop at 288 for targets of 296. While Chola Finance, we had a sell on this earlier, is a couple of days back with that negative news on Friday. Now is a STBT with the stop at about 1115 for targets of 1085.
Okay. Got it. Okay, all right. Mitesh, thanks a lot for that. Just one stock, FEM should come up. FEM should come up for you on the screen. The stock was up by close to 5% when we started off the show. Now it's up close to 10%. And I think bulk of that move has come the last 10 minutes. So FEM is the stock that I'm talking about, suddenly spiking at the high point of the day as we speak. Slip into a short break though. On the other side, Jay Bala is going to be waiting for us. And he's going to tell us how he's looking at market action and how the technicals of the market are shaping up. Welcome back. Well, before we get to Jay Bala, I just want to highlight one of those metal stocks that are in focus today, Tata Steel. Jefferies has come out with a note, and Jefferies has maintained that their top pick from the metals and mining space is Coal India. They prefer that even in comparison to Tata Steel. On Tata Steel itself, actually, they maintain a buy rating, though they've gone ahead and they've trimmed their estimates, their EPS and EBITDA estimates for the next few years. The key reason out there is pressure in the European operations. But they go on to add that valuation-wise, well, the stock trades at around 6.6 times EV per EBITDA. That's pretty much in line with the long-term averages. And now they're making two big calls out here. One is for the sector, which is with regard to China, Asian steel spreads. And the second part, they're talking about the company. Let's focus on the Asia-China theme first. They are highlighting that spreads in the Asian region, well, they're at the lowest levels you've seen in the last 10 years, lowest since 2010. And they're also saying only 16% of the mills are now making money at these low prices. Why did the spreads get compressed to such an extent? Because steel prices have corrected from around $670 per ton to around $540 per ton. The input cost as well has gone up, which is coking coal cost have gone up by close to around 40%. Put both these two factors, that's what put pressure on the spreads. But now they're making a bigger point. They're saying they believe there's an upside risk to these spreads, and maybe if there is some more stimulus which has an impact, then we could see the spreads rebound from here. So that's why the Chinese theme could look up from here, which in turn will support global steel prices. For Tata Steel, particularly on the India operations, they're saying that steel prices have been increased. They'll get the benefit of lower coking coal cost. So Q3 margins will look better than Q2. And for the second half of the year, it'll look better than Q2 as well. That's the India business. Though for Q4, they're a little bit skeptical because coking coal costs have gone up and steel prices, we're not sure whether or not they'll move up from there. If they move up, then well and good. But otherwise, they're a little bit cautious. Though Q3, they're saying it's going to be good. On the European business, the Netherlands operations, well, they had a realignment of their blast furnace out there. That'll be behind them. So they're expecting losses to trim down from Q4 onwards. So put that together, Jefferies, they continue with their buy rating on Tata Steel, though they have trimmed down their EPS and EBITDA estimates.
Okay, that's about Tata Steel. Let's invite Jay Bala of cashthechaos.com on the show now. Jay, typically this November to December period is a good one for the markets. We tend to have that year-end rally globally and even in India. If you look back at the historical data, the October to December period has provided the maximum average returns compared to the prior periods. Are you anticipating a rally till the year end?
Yeah, thanks for having me on the show, Rima. You're spot on there. December is one of the best months for the Nifty. And this time around, not just for India, I think there's a probability of Santa Claus rally for the global markets too. So, and I had mentioned 2 weeks back that, if the markets were to take out 19,850, even on an intraday basis, that's good enough for an all-time high. I think that's what is going to happen. We saw a print of 19,875 on the 16th of November. So the probability that the markets are going to all-time high is the more probable event. But before that happens, we could see a sharp pullback to somewhere close to 19,300, 200. But the broader theme is that the 18,737 registered in October, that's going to hold for the year end. So I'm anticipating record highs into the year end. But as I mentioned 3 weeks ago, that that's probably going to be a major top. But so this is a rally that needs to be played for the short term.
Okay, so in the near term, you're saying we can pop up and make record highs, but post that you're not ruling us visit lower levels as well. We got that correct, right, Jay?
That's correct, Najib.
Okay, from the Nifty pack then, we're going to see this sort of a move. First on the upside, who's going to lead us up?
It's going to be not the banks, not Reliance. It's probably going to be IT and Pharma. And a little bit of auto. I've been mentioning that within the auto space, two-wheelers are stronger than the 3 and 4-wheelers. So, the heavies could be coming from the IT, autos, and Pharma. Pharma is a little bit lightweight, but yeah, these three sectors are my focus.
Jay, hi. Good afternoon. Asking you a slightly sort of offbeat question. Chemical stocks. I don't know if you look at companies like Navin Fluorine or some of the other names, Gujarat Fluoro or Vinati Organics. I mean, they're all in the mid-cap space, the big mid-cap companies. Because on the fundamental side now, there's a big debate underway whether this big bear market, almost a 1.5 to 2 year bear market in chemicals, whether that's coming to any sort of an end, or even SRF for that. I mean, a lot of different stocks in this entire basket. Any thoughts here?
No, I don't think any of them are looking attractive at this moment. SRF, little bit, say something for the short term, but nothing fluorine definitely doesn't look good. Probably, if you can classify Phillips Carbon Black into chemicals, no, that's a little bit of stretch. But probably it will fall under graphite. No, so but other than that, I don't think anything within the chemical space looks attractive. Maybe a little bit of Deepak nitrate. Yeah. So other than that, nothing very attractive.
Okay, so you mentioned Phillips Carbon Black branching out into commodities, bulk commodities. That just drove my attention back to Coal India and the kind of move that stock has made in the last couple of weeks, and then of course some profit taking. What do the charts say? Is this a move that could have more strength? Should one be trying to ride on it? Is anything changing?
Yeah, see, the PSUs, some of the PSU stocks like BEML, along with Coal India, are also looking a little bit interesting. But, Coal India looks like an exhaustive move for me. I need a little more, it's a little bit late, I would say, to participate here. So, it's an avoid for me. But BEML, may have a little bit of short-term upside. So a little bit of, contrasting and cross currents over there. BHEL looks a little bit negative. BML looks positive. So, I would just take it stock by stock, rather than as a sector.
Okay, all right. Let's talk about a couple of other, key factors that we track from an India market perspective, and they played out in our favor. One is the dollar index, 107 we were fretting. It's down to around 103.5. We like that. Crude oil prices as well went all the way dancing to around $97 per ton. To our good luck, it's closer to around $80 per ton. However, both these two shaping up from here?
Yeah, dollar index is probably going to correct a little bit deeper than anticipated. It's probably 100, but although 102.5 is very critical, and watch the 1.08 handle on the Euro USD cross. I think this still looks like a corrective decline for the medium term for the dollar index. I think the 99 levels is likely to hold for the medium to long term. But, it's an evolving situation. We'll track that. But Brent definitely has a lower low due below the 76.6. But how it gets to the lower low, it's going to be pretty interesting. And I've always maintained for the last several months that, Brent is due to, crack lower than $70 that it registered in March. But if we get 84.5 first and then a lower low, then we need to revisit the situation. But, in the immediate scenario, we're getting a lower low below 76.6 for Brent.
Getting back to Pharma, you said IT and Pharma is likely to lead the markets higher in the next, 1 month. In the Pharma space, which are the strongest stocks?
Yeah, obviously Aurobindo and Ajanta, they've been doing pretty well. So right now there is no participating setup at the moment. But if you want to look at something on a fresh long basis, you want to look at Dr. Reddy's and Divi's. And even a little bit of Cipla. Cipla might be, Cipla and Reddy might be the fresh breakout candidates here. Dr. Reddy with a stop below 5,200 makes sense for an objective of about 6,200. Cipla probably is heading to 1,600. So watch out for these two. And the objective within the pharma sector itself, it's an unfinished move towards 16,100. And if Cipla and Dr. Reddy's better breakout, it might stretch to about 17,000.
Okay. Just to go back to the market as a whole, Jay, what's the thought? Because we have, last couple of days, it's been a little topsy-turvy, but then you get a day like today when it's been very steady consolidation, small steps, but incrementally sort of holding on to gains. Whether it's the Nifty or the bank Nifty, which anyway has been the problem child for this market, what do you see? Anything specific that you'd like to call out for the coming few weeks?
Yeah, as I mentioned in my last interaction, that's 2 weeks ago, I had said that the probability that Bank Nifty would underperform is a significant, outcome. So that's happening. If the Nifty were to go to all-time high, like I'm anticipating, the probability that Bank Nifty may not clock a new high is a good probability. But that doesn't change the situation. And the pullback that I'm anticipating in the extreme short term to 19,200, that might be because of the banking index. And banking index could break the October low and then come back up. So that's probable outcome for the banking sector. And other than some PSU banks, I would avoid the entire banking space.
Jay, the two strongest stocks of the year have been auto names. So the first one is Tata Motors, which is up 75% year to date, followed by Bajaj Auto with a 57% rally. These are the top two Nifty gainers. Any thoughts on Tata Motors, Bajaj Auto? Do you think the next few months could be a reversal of the gains as others catch up, or do you expect outperformance to continue?
Yeah, as I'm anticipating, a major top, it's going to be a reversal for most sectors. But as I even pointed out 2-3 weeks ago, that the two-wheelers are stronger, and I picked up Hero Motors for record highs, and that's come through. Bajaj Auto is the other one, and TVS Motors are the other. So these three names are strong within the auto space. Bajaj Auto still has got upside potential somewhere close to 6,000, but that could be an exhaustive move. But the strongest within that space for me is Hero Motors and TVS. Tata Motors, as I mentioned, 609 is very critical. As long as the stock stays above that, it's still trending up. But if 609 were to break, I would think it's a reversal for the particular stock and might have an impact on the overall sector.
Okay. All right, Jay, we'll leave it on that note. Thank you very much for joining in this afternoon. Appreciate you giving us perspective on the market. Well, we're all set to close down now, just a couple of minutes left. So let's bring it in. And it's not a bad day at all. Nigel, it reminds me about, okay, I know you said no cricket analogies, but I'm not referring to any specific game. It's just like that steady innings, right? You get the singles, and by the end of it, you have a nice total on the board, and that's what it reminds me of today. I'm just not taking any names or teams. I just said cricket in general.
Yeah, I mean, Rahul Dravid, a bit of heartbreak, right? Part of 2003 and 2023. But be that as it may, it's been that sort of a day, a steady kind of day, though the mid-cap index has underperformed after a while. Plenty of stocks, though, did pretty well. From the Nifty pack itself, we have SBI Life, that's one of the top gainers. HDFC Life as well is doing pretty well. So both of them, they go home with the top honors of the day, up close to around 2.5% to around 3%. Adani Enterprises as well was up close to around 2%. And Hindalco popped up in trade. In fact, the metal index did badly. Whether it was Hindalco, JSW Steel, Tata Steel, all three of them did well. But keep in mind, the reason the markets ended high was because of a couple of heavyweights that managed to end with a gain of close to 100%. You have Reliance Industries and HDFC Bank, both of them going home with 1% apiece.
In fact, the Nifty Metal Index is the best performing sectoral index. We've seen the dollar index also ease to a 2-month low, and that's perhaps given wings to the Nifty Metal Index, which is ending up with a gain of 1.25%. On the mid-cap end of trade, the big star is Titagarh Rail. On getting into the strategic partnership with ABB India, stock ends with a gain of nearly 7%. Oberoi Realty, the Thane launch, plus yesterday the news about the NCR foray, the stock was up close to about 4%. On the losing side, KPIT Tech got, faced some drubbing, the stock lower by nearly about 4%. Other notable gainers on the mid-cap end, Ashok Leyland, Z Entertainment, Max Financial, IEX. These are stocks with gains anywhere between about 2 to 4%.
Well, not a bad day for mid-caps, as you were saying. I was just looking at the final moves coming in on, for instance, on Ashok Leyland, 4% up over here. Kalyan Jewellers, 6.5%. RR Kabel, 8% on that stock. It's a recent listing. So, clearly people are looking around here and there. Hunasa, 5% by the time we're ending out. GE, TND, 3 to 4% higher. So, not a bad day for mid-caps, you'd have to say. A lot of individual selective stock action. That was the hallmark of the day. We're going home very close to the 19,780 mark. Not bad for the index as well. Remember, guys, tomorrow, we'll come back and there'll be a lot of back and forth around the FOMC minutes, which come out later this evening. And the markets will hope that the recent cool-off on the bond yield side, at least that continues, because the US markets have provided a very nice sort of a platform for us to start the day on. And I suppose we'll hope that that only continues tomorrow. And NVIDIA's numbers, right? That'll be tracked very closely by the street because NASDAQ has had a 5-day winning streak. So if NVIDIA provides a good set of numbers, maybe the rally there continues. But the bell has gone, the markets have ended, so we're going to slip into a very short break, but we'll come back with more.